Good afternoon. This is Mayor Vilensky with Driving Markets, weekend summary of financial markets. Let's kick off. Right, so this week you had a raft of economic numbers coming out. You also had a sort of upset between Donald Trump and Elon Musk, and we'll come to that later on. So let's go over the numbers and just explain a little bit in depth as to what those numbers mean and which direction markets will go as a result. So we had the two Institute of Supply numbers coming out. So the Institute of Supply Managers Manufacturing Report and the Institute of Supply Manufacturers Service Report. And the Manufacturers Report measures, quite simply, the PMI, the numbers that the purchasing managers are producing as far as goods are concerned. Services will be holidays, will be restaurants, will be venture camps, will be parks, that type of area. Now, those two survey reports came in lower than expected, indicating economic slowdown, both in terms of manufacturing and in terms of the service sector. A number above 50 is expansion, a number below 50 is contraction. And both those numbers came in below 50, so that is one to keep an eye on. We also had in China, the China Caixin Manufacturing Purchasing Managers Index. That came in slightly higher than expected. So that would indicate that China is expanding as regards manufacturing. Again, you can't always 100% trust the Chinese as to what the numbers are, but that number, when it came out, was pretty indicative of an expanding manufacturing sector. And then on Tuesday, you had the JOLTS report. The JOLTS report is the Job Opening Labour Turnover Survey report. That's the amount of new job openings there is in the US. And that number came in at 7,390,000. So it was a higher than expected. The number expected was about 7.05 million to come in. So that shows that there are more jobs that are opening up in the private sector. Now that is a good thing because it is private sector job openings, not government sector job openings. And what you want to have in an economy is private sector expansion, not necessarily government expansion. And under the Biden-Harris administration, what you did have, you had government expansion, and that government expansion was there essentially to mislead you and misrepresent the overall health of the economy. And in addition to that, it pushed up GDP, gross domestic product, because GDP in the US, they use wages and salaries as a contribution towards GDP, even though there's no trade within the country itself. It's just salaries. They use that, and therefore the GDP under Biden-Harris was higher than should have been. The real GDP should have been about 1.5%, and they made it anywhere between 3.5% and 4%. Under Trump, with expansion in the private sector, then you could bet your bottom dollar that you're going to have probably real high GDP, real growth under the economy. Then you had the ADP number. Now, the ADP is the auto data processing, which is a payroll number based on 400,000 businesses. In other words, are they paying out more money or less? It's a measure of the payroll, and that came in lower than expected, again indicating a contraction in the economy. So contradicting numbers there. You've got job openings higher and you've got payroll numbers lower, and that could be accounted for as, quite simply, companies are not yet taking on new employees. And then on top of that, you had the ECB, European Central Bank rate decision that was expected to come out with a 25 basis point cut. So the Europeans have cut interest rates down to 2.15%. The next one to cut interest rates is going to be the US. There are going to be interest rate cuts in the US as the economy slows down and contracts. Then Jerome Powell of the Fed is going to have to cut rates in order to stimulate the overall economy. And then you've got jobless claims came out on Thursday. Now, expect jobless claims to rise. Why is that? Because more people that were not registered for work under Biden-Harris are now entering the search for work. So by registering that you're looking for a job, that will increase. You become a registered unemployed individual, and therefore those numbers of unemployment will rise purely on the basis that there's more people now going to be joining the look for job workforce. And then Friday, you've got the non-farm payrolls. And the non-farm payrolls are not yet out based on this broadcast, but I do expect them to come in lower. If they come in less than expected, that would put, again, more flexibility as far as the Fed is concerned in reducing interest rates. Things to look at where we've seen some serious moves: gold and silver. Now, we do run a gold group which obviously incorporates silver, and I've been pushing non-stop that we should be buying silver. We have been buying silver from much lower levels on the group, say from $27.30 to where it is now at $36.20, and we expect silver to continue moving up. There are fundamentals behind that metal: high demand, low supply, not enough mining, used in batteries for cars, electric vehicles, used on solar panels, is a number one conductor of electricity and has a number of uses that beat other metals. But overall, I expect silver to continue moving. So that was a big mover. The other one was Tesla on Thursday, after Elon Musk came out and slagged off, criticized Donald Trump, and then Donald Trump criticized Elon Musk, and he said, actually, he made a tweet, Donald Trump, that he can't understand why under the Biden House administration they didn't take away some of the tax concessions on Tesla, and Tesla sank all the way down to about 276. Now, we sold Tesla short at 361 on the stocks group and then bought it back at 276 and probably expect it to rise all the way up. That is a good stock to keep an eye on. Overall, a lot of activity, a lot of nervousness, and a lot of flow into precious metals, and that will continue. Dollar, weakened dollar this week, right? A weakened dollar again. The overall DXY index, which is the dollar index that measures a basket of currencies, is on the descent, not on the ascent, and therefore any rise up is an opportunity to sell the dollar. And you've seen the pound stronger and the euro stronger. As far as GBP USD, my target there's 137.50, could creep up there. Dollar yen, we've been selling that all the way from 162. That is one to watch on the FX. Cryptos, can't miss cryptos. Bitcoin came off from 110 down to 100, bounced up to 102.5. My target on Bitcoin again is the 120 to 150 level near term, and that we discuss obviously on the crypto group as well. So we've covered most of the stuff. Bonds are frighteningly high. The yields on them are continuously pushing up, and that is again a lead indicator as to concerns on fiscal monetary system and also financial markets. This is Meir Walensky with Driving Markets and your week ending summary. Catch you later.